Welcome to the journey of masterclasses, where tradition meets the cutting edge of modern finance. Today, we begin our deep dive into the mechanics of wealth, starting with the foundational principles of market structure and growth. Understanding price action is the first step toward true financial independence in today's volatile world. We analyze the subtle shifts in supply and demand to predict where the smart money is moving before the crowd reacts. Liquidity is the lifeblood of every successful trade you will ever execute on the global stage. Without depth, even the best strategy fails, so we prioritize high-volume environments to ensure seamless entries and exits every time. Risk management isn't just a safety net. It is the core engine that allows for long-term survival and prosperity. We never bet the farm. Instead, we calculate every move with surgical precision to protect our capital. Look at the quiet strength of history found in these ancient corridors of commerce and trade. Just like a sturdy wrought iron gate, a solid portfolio requires time, patience, and the right environment to truly endure and thrive. Technical analysis provides the map, but your discipline provides the fuel to reach your ultimate destination. By mastering chart patterns and indicators, we strip away the noise and focus on the high-probability signals that matter. Volatility is often feared by the masses, but for the educated professional, it is a golden opportunity. We learn to embrace price swings and use them to extract value when others are driven by fear and panic. Psychology plays a much larger role in your success than any algorithm or mathematical formula ever could. Controlling your emotions during a drawdown is what separates the elite performers from those who eventually give up completely. Diversification is the only free lunch in the world of investing, allowing you to reduce risk without sacrificing gains. We spread our exposure across various asset classes to ensure that one bad move never sinks the ship. Observation is a skill that pays dividends far beyond the initial investment of your time and focus. Much like watching the rhythmic movement of a city, we wait for the perfect alignment of timing and market opportunity. Compounding interest is the eighth wonder of the world, turning small, consistent gains into massive fortunes over time. The key is to start early, stay consistent, and let time do the heavy lifting for your future. Trend following allows us to ride the momentum of the market instead of trying to fight the powerful tide. We identify the dominant direction and stay aligned with it until the data tells us the trend is over. Leverage can be a powerful ally or a destructive enemy, depending entirely on how you choose to handle it. We use it sparingly and strategically to amplify our wins while keeping a strict ceiling on potential losses. Asset allocation is the primary driver of your long-term returns, outweighing individual stock selection in almost every study. We build a balanced framework that reflects your goals, risk tolerance, and the current economic climate today. Patience is the ultimate virtue when waiting for the perfect setup to appear on your trading screen. Like a quiet harbor at dawn, the most profitable opportunities often reveal themselves only to those who are willing to wait. Fundamental analysis helps us understand the intrinsic value of what we are buying beneath the surface noise. We look at earnings, growth potential, and competitive moats to ensure we are holding assets with real, lasting substance. Market cycles are inevitable, moving from optimism to euphoria and then back down to fear and depression. By recognizing where we are in the cycle, we can buy low and sell high with much greater confidence. Economic indicators like inflation and interest rates provide the macro backdrop for every single trade we make. We stay informed on global policy shifts to understand the broader forces that are driving capital across the world. Automation and algorithms can help remove human error from the execution phase of your trading plan. We leverage technology to handle the repetitive tasks, allowing us to focus our mental energy on high-level strategy and vision. Structure provides the framework for all successful endeavors, whether in construction or in complex financial engineering. We look for patterns in the environment that signal a return to order and a predictable path forward. Scalability is the secret to turning a successful hobby into a massive, world-class financial enterprise. We design systems that can handle increased volume and capital without breaking down or losing their edge in the open market. Hedging allows us to sleep soundly at night, knowing our downside is protected regardless of market direction. We use options and inverse correlations to create a fortress around our most valuable and profitable core positions today. Capital preservation is our first priority, even before we consider the potential for massive upside growth. If you lose your chips, you can't play the game, so we guard our principle with extreme and unwavering diligence. Information symmetry is the advantage we seek by staying ahead of the news cycle and analyzing raw data. In a world of fast-moving headlines, the one who interprets the information most accurately is the one who wins. Perspective is everything when you are navigating the complex and often confusing world of global trade. From a high vantage point, the chaotic movements of the market begin to form clear and very predictable patterns. Execution speed can be the difference between a winning trade and a missed opportunity in high-frequency environments. We optimize our tech stack and connections to ensure that our orders are filled at the best possible prices. Portfolio rebalancing ensures that we are always buying low and selling high according to our original plan. It forces us to take profits from winners and reinvest in undervalued areas, maintaining our desired risk profile perfectly. Margin of safety is the concept of buying assets at a significant discount to their true intrinsic value. This buffer protects us from errors in judgment or unexpected market shocks that could otherwise derail our long-term goals. Correlation analysis helps us understand how different assets move in relation to one another during stress. We seek non-correlated returns to ensure that a crash in one sector doesn't lead to a total portfolio wipeout. Timelessness is found in the objects and strategies that continue to work decade after decade without fail. We look for the enduring principles of value that remain constant even as the world changes around us rapidly. Arbitrage involves exploiting price differences for the same asset across different markets or platforms instantly. It requires sophisticated tools and lightning-fast execution, but it offers a path to low-risk, consistent profits in any environment. Yield farming and staking allow us to put our idle assets to work, generating passive income 24/7. We navigate the decentralized landscape to find the best returns while carefully managing the unique risks of new protocols. Position sizing is perhaps the most underrated aspect of a professional and successful trading system. Even a strategy with a low win rate can be highly profitable if you manage your bet sizes correctly every time. Backtesting allows us to prove our ideas using historical data before risking a single cent of real capital. We iterate on our strategies until the numbers show a clear and consistent mathematical edge over the market. Reflection and stillness are necessary to process the massive amounts of data we encounter every single day. Taking a moment to breathe and observe allows the mind to find the hidden signals within the noise. Sentiment analysis helps us gauge the mood of the market and identify potential reversal points ahead of time. When everyone is euphoric, we get cautious. When everyone is terrified, we look for the best buying opportunities. Fixed income provides the steady foundation of cash flow that supports our more aggressive growth-oriented plays. We balance our portfolio with bonds and high-yield instruments to ensure a constant stream of revenue in all conditions. Order flow trading gives us a real-time look at what the big institutions are doing behind the scenes. By watching the tape, we can see the true conviction of buyers and sellers before the price moves. Global macro strategies involve betting on the big picture, from currency shifts to geopolitical changes across borders. We analyze the world as a giant interconnected machine where one small gear can move the entire financial system. Consistency is the hallmark of a true professional in any field, especially in the high-stakes world of finance. Small, repeatable actions taken every day lead to results that appear miraculous to those looking from the outside. Tax efficiency is just as important as generating high returns when it comes to building lasting generational wealth. We use legal structures and strategic accounts to keep more of what we earn for our family's future. Exit strategies must be defined before you ever enter a trade, removing the element of hesitation when it matters. We know exactly where we will take profit and where we will cut our losses without question. Infinite banking and private lending allow us to act as our own source of capital for future projects. By controlling the flow of credit, we bypass traditional hurdles and accelerate our path to total financial freedom. Technical indicators like RSI and MACD are useful tools, but they must be used in the correct context. We combine them with price action and volume to build a high-conviction thesis for every single market move. Endurance is required to survive the long winters of the market when nothing seems to be moving in your favor. Just like a steady light in the dark, a clear vision keeps you moving forward steadily. Algorithmic trading removes the biases that often plague human decision-making during times of extreme market stress. We code our rules into robust systems that execute flawlessly, 24 hours a day, without ever feeling fear or greed. Value investing requires the courage to go against the grain and buy what others are currently ignoring or hating. We look for hidden gems with strong balance sheets that are temporarily out of favor with the crowd. Growth investing focuses on the innovators and disruptors who are changing the way the entire world operates today. We look for companies with massive addressable markets and the leadership to capture that potential for our benefit. Risk-adjusted returns are the only metric that truly matters when comparing the performance of different investment strategies. Making 50% is meaningless if you had to risk a 90% drawdown to get there today. Precision is the difference between a successful operation and a costly mistake in the intricate world of finance. Every detail, no matter how small, must be checked and verified to ensure the integrity of the system. Passive income is the holy grail of finance, allowing your money to work for you while you sleep soundly. We build diverse streams of revenue from real estate, dividends, and digital assets to fund our ultimate lifestyle. The bid-ask spread is a small cost that can add up to huge losses if you are not careful. We use limit orders and seek out deep pools of liquidity to minimize our friction and maximize our returns. Venture capital allows us to get in on the ground floor of the next giant technological revolution today. We take calculated risks on talented founders and disruptive ideas that have the potential for a 1,000-fold return eventually. Commodities trading provides a hedge against inflation and a way to profit from the physical world's supply constraints. From gold to energy, we understand the cycles of the earth and how they drive global economic value. Preparedness is the key to seizing the rare opportunities that only appear once in a very long lifetime. By having our capital ready and our plan in place, we can act while others are still hesitating. Derivatives like futures and options allow us to express complex market views with built-in leverage and defined risk. We use these powerful instruments to protect our gains and speculate on the future with surgical accuracy. Real estate investing provides a tangible asset with multiple ways to win, from rental income to long-term appreciation. We focus on prime locations and distressed properties where we can add significant value through our expertise today. Currency trading, or Forex, is the largest and most liquid market in the world, operating every single hour. We analyze interest rate differentials and geopolitical stability to profit from the relative strength of different global nations. Behavioral finance teaches us that markets are not rational because the people who trade them are not rational. By understanding the common pitfalls of the human mind, we can avoid them and profit from others' mistakes. Legacy is the final stage of our journey, where we turn our success into a lasting impact for the world. We build systems that will outlive us, ensuring that our wisdom and wealth continue to grow. Market equilibrium is a theoretical ideal, but the true profit lies in identifying the moments when the scale tips. We hunt for these imbalances, positioning ourselves to capture the inevitable snapback to fair market value. Liquidity provider strategies allow us to earn fees by facilitating trades for others in the decentralized finance space. By acting as the house, we shift our focus from betting on price to capturing volume and volatility. Momentum oscillators help us identify when a move has become overextended and a reversal is likely on the horizon. We don't chase the tail end of a rally, we look for the exhaustion that signals a shift. Quantitative research involves using mathematical models to find patterns that are invisible to the naked human eye. We rely on data-driven evidence rather than gut feelings to make our most important capital allocation decisions today. The passage of time reveals the true quality of an investment, stripping away the hype and leaving only the substance. Like ancient stone under a blue-hour sky, the best assets possess an inherent, unshakable durability. Volatility clustering teaches us that big price moves tend to be followed by more big moves in the same direction. We adjust our risk parameters accordingly, tightening our stops when the market begins to show signs of turbulence. Systematic trading is about removing the hero from the equation and letting the process dictate every single action. We follow the rules of our proven model with iron discipline, regardless of what the headlines say. Dark pools and hidden orders represent the true intentions of the largest players in the global financial arena. We use advanced flow analysis to see where the real whales are accumulating their massive core positions today. The cost of carry is a vital consideration when holding long-term positions in the futures or commodities markets. We calculate the storage, insurance, and interest costs to ensure our net profit remains positive over time. Precision in timing is not about predicting the exact bottom, but about entering when the risk-to-reward ratio is skewed heavily in your favor. Like a master craftsman, we wait for the perfect alignment of factors. Capital efficiency is the art of getting the maximum possible return from every single dollar we put at risk. We use strategic margin and collateral management to amplify our power without overextending our primary safety net. Relative strength analysis compares an asset against its peers to find the true leaders in any given sector. We want to own the strongest names in a bull market and short the weakest during a crash. Mean reversion is the powerful force that eventually pulls prices back to their long-term historical averages. We identify extreme deviations from the mean and prepare for the inevitable correction that brings the market back into balance. Countercyclical investing involves buying when the economic news is at its worst and selling when everyone feels invincible. It is a lonely path that requires immense mental strength and a very long-term time horizon today. The intersection of technology and finance creates a new frontier where the fast and the focused can thrive. In this digital landscape, information travels at the speed of light, and our systems must be equally fast. Stress testing our portfolio allows us to visualize how we would survive a black swan event or a market collapse. We prepare for the worst-case scenario so that we can act calmly while others are panicking. The wealth effect describes how rising asset prices can stimulate consumer spending and further drive the economy. We monitor these psychological feedback loops to understand the underlying health of the current market expansion phase today. Order execution algorithms are designed to minimize market impact when buying or selling very large blocks of stock. We break our orders into smaller pieces, hiding our footprint from predatory high-frequency trading bots and competitors. Financial literacy is the foundation upon which all of our future success and generational wealth is built. We never stop learning, constantly refining our understanding of the complex systems that govern the global flow of money. The strength of a system is measured by its ability to withstand pressure without breaking under the weight of expectations. We build our financial lives with the same care and attention to detail as fine architecture. Scalping requires intense focus and the ability to make split-second decisions based on very small price movements. It isn't for everyone, but for those with the right temperament, it offers a way to compound capital rapidly. The yield curve is one of the most reliable predictors of future economic recessions and market turns. We watch the relationship between short and long-term interest rates to stay ahead of the broader credit cycle. Sharpe and Sortino ratios help us quantify the quality of our returns by measuring them against the risk taken. We don't just want high profits, we want smooth, consistent growth with minimal drawdowns along the way. Intermarket analysis looks at the relationships between stocks, bonds, commodities, and currencies to find hidden clues. A move in the bond market often signals a major shift in equities weeks or even months in advance. Silence provides the clarity needed to make high-stakes decisions when the rest of the world is shouting. In the stillness of the morning, we find the perspective required to lead with confidence and grace. Survivorship bias is a common trap where we only look at the winners and ignore the many who failed. We study both success and failure to build a realistic and robust model of how the world works. The anchoring bias can cause us to hold onto a price target that is no longer relevant to current reality. We remain flexible, updating our views as new information enters the market and the environment changes. Greeks in options trading, delta, gamma, theta, and vega, allow us to measure our sensitivity to price, time, and volatility. We master these variables to turn the passage of time into a consistent source of profit. Fiscal policy and government spending have a direct impact on the liquidity available in the private markets. We track the flow of funds from the Treasury to understand the next big wave of capital injection. Great achievements are the result of small, disciplined choices made over a very long period of time. There are no shortcuts to true mastery. There is only the consistent application of sound and proven principles. The Santa Claus rally and other seasonal patterns can provide a statistical edge at certain times of the year. We look for these recurring anomalies to boost our returns during high-probability windows of market strength today. Position trades can last for months or even years, capturing the massive moves that define a whole decade. It requires the conviction to hold through minor pullbacks while keeping your eyes on the ultimate long-term prize. Value traps look like bargains on paper, but continue to bleed capital as their underlying business decays. We use qualitative research to distinguish between a temporary setback and a permanent decline in a company's competitive moat. High-frequency trading has changed the landscape of the modern market, making it more efficient but also more complex. We adapt our strategies to thrive in this environment, using technology to our advantage rather than fighting it. Looking toward the horizon allows us to see the coming trends before they arrive at our doorstep. By positioning ourselves early, we can ride the wave of change instead of being swept away by its power. Portfolio insurance involves using put options to lock in a floor for our portfolio value during uncertain times. It's a small price to pay for the peace of mind that comes with knowing our capital is safe. The Janus-faced nature of risk means that every potential for profit carries an equal potential for loss. We respect the duality of the market, never becoming too overconfident even during our longest and most successful winning streaks. Technical indicators should never be used in isolation. They are simply tools to help tell the story of price. We look for confluence, when multiple different factors all point toward the same conclusion at the same time. A stop-loss is not an admission of failure, but a professional tool for capital preservation and risk control. By cutting our losses early, we ensure that we live to trade another day with our bankroll intact. The journey to the top is built on a foundation of integrity, knowledge, and an unwavering commitment to excellence. We celebrate the milestones along the way, knowing that each one brings us closer to our ultimate vision. The January effect often sets the tone for the entire year as institutional money rebalances and enters new positions. We analyze the early movers to spot the sectors that are likely to lead the market higher. Risk parity is a strategy that allocates capital based on the risk each asset contributes to the total portfolio. This approach creates a more stable and resilient investment vehicle that can perform well in any environment. The wash-sale rule is a critical tax consideration for active traders who frequently move in and out of positions. We manage our trades carefully to ensure we don't inadvertently lose our ability to claim losses. Emerging markets offer the potential for explosive growth, but they come with unique political and currency risks. We diversify our international exposure, seeking out the next generation of global economic leaders with very careful research. A clear view of the future requires us to step away from the noise of the present moment. From a distance, we can see the broader movements of the tide and prepare for the coming shift. Technical divergence occurs when the price moves in one direction, while an indicator moves in the opposite direction. This is a powerful warning sign that the current trend is losing steam and a reversal is near. The dogs of the Dow strategy involves buying the highest-yielding stocks in the index at the start of the year. This simple, value-oriented approach has historically outperformed the broader market by focusing on unloved, high-quality companies. The Black-Scholes model revolutionized the world of options by providing a mathematical way to calculate fair value. We use these formulas as a baseline to find mispriced opportunities where the market's fear is overstated today. Short selling allows us to profit from declining prices, providing a way to make money even during a bear market. It requires strict risk management, as the potential losses are theoretically infinite if the price spikes. Order and discipline are the twins that lead to a life of abundance and peace. By following a structured plan, we remove the chaos from our lives and create the space for true wealth to flourish. Gamma scalping is a sophisticated technique used by options traders to stay delta neutral while profiting from volatility. It involves constantly buying and selling the underlying asset to offset the changing risks of an options position. The carry trade involves borrowing in a low-interest rate currency to invest in a higher-yielding one. It is a popular strategy among global macro funds, but it carries significant risk if the exchange rates move against you. Fibonacci retracements are based on natural mathematical ratios that frequently appear in market corrections. We use these levels to identify potential support and resistance zones where the crowd is likely to step in and trade. The TINA acronym, "There is no alternative," often drives investors into stocks when bond yields are too low. We monitor the relative attractiveness of different asset classes to understand where the next wall of money is heading. Clarity is found in the simple moments of connection with the world around us. By grounding ourselves in reality, we can make better decisions that are not influenced by the temporary madness of the crowd. The Hindenburg omen is a technical indicator designed to predict an impending stock market crash. While not perfect, it serves as a valuable warning sign that the market's internal health is deteriorating and caution is warranted. A short squeeze occurs when a rapidly rising price forces short sellers to cover their positions, fueling an even faster move up. We look for heavily shorted stocks with positive catalysts to capture these explosive rallies. Value at risk, or VAR, is a statistical technique used to measure the maximum potential loss over a specific time frame. It is a standard tool for institutional risk management, helping us quantify our exposure to extreme events. The Buffett indicator compares the total value of the stock market to the country's GDP. When this ratio is at historical extremes, it suggests that the market may be overvalued and due for a long-term correction. Sustainability is the ultimate goal of any well-designed financial or biological system. We aim for growth that can be maintained indefinitely, providing security and prosperity for many generations to come after we are gone. Momentum investing focuses on the tendency of assets that have performed well in the recent past to continue performing well. We look for the strongest stocks with high relative strength to stay ahead of the broader market index. The efficient market hypothesis suggests that all available information is already reflected in prices, but we know better. We look for the psychological gaps and institutional delays that create small, profitable windows of opportunity every day. Dark volume analysis tracks the massive, off-exchange trades that institutional whales use to hide their footprints. By following these large-scale buy and sell orders, we can align ourselves with the true direction of the smart money. Mean reversion strategies profit from the market's tendency to return to a central average after an extreme move. We use standard deviation bands to identify when the rubber band has been stretched too far and is ready. True power lies in the ability to wait for the right moment while the rest of the world rushes in. From a steady vantage point, we watch the patterns emerge, knowing that patience is the highest-paid skill. Volatility forecasting allows us to price options more accurately and adjust our position sizes before a market storm hits. We use historical data and implied volatility rankings to understand the current climate of fear and greed. The Kelly criterion is a mathematical formula used to determine the optimal size of a series of bets. It helps us maximize our long-term wealth growth while theoretically reducing the risk of a total portfolio ruin. Event-driven investing focuses on corporate milestones like mergers, acquisitions, or earnings surprises. We analyze the legal and financial details to find mispriced outcomes where the market has failed to account for all possible scenarios today. Direct indexing allows us to own the individual stocks within an index, giving us greater control over tax loss harvesting. This sophisticated approach helps us keep more of our gains while maintaining broad and diversified market exposure. A solid structure is the only thing that can withstand the test of time and changing seasons. In finance, as in architecture, we build our foundations on solid rock to ensure our legacy remains standing for decades. Delta-neutral strategies aim to profit from time decay or changes in volatility while remaining indifferent to price direction. We balance our Greeks carefully to create a portfolio that can generate steady returns in any market condition. The wisdom of crowds suggests that a large group of people is often smarter than any individual expert. We monitor social sentiment and prediction markets to see where the collective mind is heading before the move happens. Pair trading involves going long on one stock while simultaneously shorting another in the same industry. This market-neutral strategy allows us to profit from the relative performance of two companies while canceling out broader market risk. Liquidity gaps occur when price jumps over certain levels without any trading taking place. We identify these zones because they often act as magnets, with price eventually returning to fill the gap and find a balance. Perspective allows us to see the beauty and the complexity of the systems we navigate. By taking a higher view, we realize that every challenge is simply a necessary step toward the ultimate goal of mastery. Statistical arbitrage uses complex algorithms to profit from temporary price discrepancies between related financial instruments. We leverage high-speed data and mathematical models to capture these tiny, low-risk profits thousands of times every single day. The VIX, or Fear Index, measures the market's expectation of 30-day volatility based on S&P 500 options. We use it as a contrarian indicator, looking to buy when fear is high and sell when everyone is complacent. Asset-backed securities turn illiquid assets into tradable financial instruments, providing a way to diversify into niche markets. We analyze the underlying collateral to ensure the security is backed by real and sustainable value for our portfolio. The margin of profit is the difference between your revenue and your costs, including the cost of your time. We optimize every part of our trading business to ensure that our net take-home pay remains high. A legacy is built by doing the right things consistently, even when no one is watching. The quality of our work today determines the strength of the foundation we leave behind for the next generation of builders. Inverted yield curves have preceded almost every major economic downturn in modern history. We watch the spread between short-term and long-term debt carefully to know when it is time to shift into defensive, protective assets. The law of large numbers suggests that as we increase our number of trades, our results will move closer to our expected value. We focus on taking enough high-quality setups to let our mathematical edge truly play out. Price elasticity measures how the quantity demanded of an asset changes in response to a change in its price. We look for inelastic assets that people must buy regardless of price, providing a solid floor for our investments. Market depth, or the order book, shows us the pending buy and sell orders at different price levels. We use this data to see where large institutions have placed their walls, indicating strong support or heavy resistance. The horizon is always moving, and so must our understanding of the world. By staying curious and adaptable, we ensure that we are never left behind by the rapid and inevitable pace of global change. A gamma squeeze can cause explosive upward moves when market makers are forced to buy the underlying stock to hedge their options exposure. We identify the triggers for these events to capture rapid, parabolic gains in short periods. Cross-asset correlation shows us how different markets like gold, oil, and stocks influence one another in real time. We use these interconnections to confirm our trades and avoid being caught off guard by a move in a related sector. Tail risk hedging involves buying deep out-of-the-money put options to protect against extreme, low-probability, black swan events. It is a small insurance premium that can save your entire fortune during a once-in-a-decade market crash. The time value of money teaches us that $1 today is worth more than $1 tomorrow. We use this principle to discount future cash flows and determine the true present value of any potential investment today. Observation is the beginning of wisdom in both the natural and financial worlds. By watching the patterns of the city and the markets, we learn to move in harmony with the great forces of the universe. Theta decay is the silent enemy of the option buyer, but the best friend of the option seller. We use strategies like credit spreads to let the clock work in our favor, collecting premium as time slowly melts away. The revenge trading trap occurs after a loss, when the desire to make it back quickly leads to even bigger mistakes. We maintain a strict cool-down period to ensure we only trade with a clear and rational mind. Capital gains taxes can significantly erode your long-term wealth if you do not plan for them carefully. We use tax loss harvesting and long-term holding periods to keep our tax liability as low as legally possible every year. The double bottom pattern is a classic technical signal that a downtrend has ended and a new uptrend is beginning. We wait for the confirmation of a breakout on high volume to ensure the buyers have truly taken. Success is not a destination, but a way of traveling through the world with purpose and intent. From a high point of clarity, we see that every experience has been a vital part of our growth. Stochastic oscillators help us find overbought and oversold conditions within a trading range. We use them in conjunction with the overall trend to find high-probability entry points during temporary pullbacks in a strong and growing market. The anchoring effect causes investors to fixate on the price they paid for an asset rather than its current value. We train ourselves to look forward, making decisions based on what is likely to happen next, not history. Commodity Channel Index, or CCI, helps us identify new trends or warn of extreme price conditions. We use it to spot cyclical turns in markets like energy and agriculture, allowing us to position ourselves before the crowd. A bear trap occurs when a price breaks below a support level, tricking short sellers into entering before quickly reversing higher. We look for these false breakouts to find high-conviction long entries that catch the shorts off. True wealth is the ability to enjoy the fruits of your labor while knowing that your future is secure. We build our systems not just for the money, but for the freedom and peace of mind they provide. Trendline breaks are often the first sign that a major market shift is underway. We monitor these diagonal boundaries carefully, looking for a strong close outside the line to signal that the old trend is finally over. The equity curve is the visual representation of your trading performance over time. We strive for a smooth, upward-sloping line, as extreme volatility in your account balance can lead to emotional decision-making and costly strategic errors. Relative Strength Index, or RSI, measures the speed and change of price movements on a scale of 0 to 100. We look for divergences and extreme readings to identify when a market is truly exhausted and ready. The falling wedge is a bullish chart pattern that signals the end of a correction and the start of a new rally. We watch for the price to break the upper resistance line as our signal to enter long. The light of knowledge illuminates the path to success, even in the darkest and most uncertain times. By staying committed to our education, we ensure that we always have a map to guide us forward safely. Average True Range, or ATR, measures market volatility by decomposing the entire range of an asset price for a specific period. We use it to set our stop-loss levels based on the actual noise of the market. The golden cross occurs when a short-term moving average crosses above a long-term moving average. It is a powerful, long-term bullish signal that tells us the momentum of the market has shifted in our favor for months. Market depth optimization involves finding the best price for large orders while minimizing slippage and impact. We use advanced execution tools to navigate the liquid pools of capital and ensure our trades are filled efficiently and fairly. Momentum maps help us visualize which sectors are leading the market and which are falling behind. By following the strongest trends, we increase our probability of success and ensure we are always positioned in the highest performing assets today. Patience is the virtue that allows a strategy to mature and bear fruit over time. Like waiting for a scheduled arrival in a busy city, we trust the system and stay prepared for the moment our opportunity arrives. Delta-neutral hedging creates a defensive shield around our capital, allowing us to survive high volatility without taking a directional side. We harvest gains from the passage of time while maintaining a stable and protected core position. The bid-ask spread is the hidden cost of doing business in the financial markets. By providing liquidity and keeping our spreads tight, we maximize our capture and minimize the friction that can eat away at our total profits. Atomic settlement ensures that the transfer of assets happens instantly and securely without the need for a middleman. We embrace these trustless protocols to eliminate counterparty risk and ensure total finality in every single one of our trades. A strategic exit is just as important as a perfect entry when it comes to realizing your gains. We plan our targets in advance, exiting with discipline once our goals are met, and moving our capital to the next. The ultimate reward comes to those who have the patience to plant their seeds and wait for the harvest. Like a quiet lake at dawn, the biggest wins often require us to be still and wait for timing. Compound growth is the custodian of our long-term wealth, turning steady contributions into a mountain of capital. We protect our growth by reinvesting our gains and letting the power of time work its miracle for our future. Consolidating our assets into a unified strategy allows us to root our capital with maximum efficiency and zero waste. We eliminate fragmentation to ensure that every dollar we own is working toward a single, powerful, and clear goal. A laddered entry strategy allows us to scale into a position over time, averaging our price and reducing the risk of a single bad entry. We climb toward our goals one disciplined step at a time. The final confluence is when all of our signals, data, and intuition align to point toward one inevitable conclusion. With our systems ready and our mind clear, we move forward into the future with absolute and total confidence. We end where we began, with the simple act of planting a seed for the future. True wealth is not found in the numbers on a screen, but in the patience and discipline it takes to watch a garden grow.